The rise in soybean futures has been good news for Mid-South farmers, but it's also leading rice farmers to rethink their plans for 2021. Veteran rice analyst Milo Hamilton discussed the impact of higher bean prices and other market factors in this video from his presentation during the Rice Marketing Education Seminar at this year's virtual Mid-South Farm and Gin Show.
But what's happening now in the West is that the prices are going down. We've already gone down. We've made that adjustment, and Brazil is starting to go down. The question is, how low will it go? And that will depend upon how the harvest goes in the next 30 days. But my sources down there say that the Brazilian crop is down at least 5% on yield alone. When the crop is down in Brazil, that's the most important item. And in Asia, the prices have been quite jumpy. In terms of a flat price, we are at least $1.50 below the paddy price, the rough rice price in Brazil. So we are cheap to that area. Net exports from the West are down at least 30%. And China is drawing in feed from everywhere. And in particular, it is grinding up rice in a ratio of about 85% rice to 15% wheat to feed out to poultry, which is coming on strong. And so rice is turned into a feed ingredient in China. And when you talk about that, it's a 5 to 8 million metric ton increase in their demand, which I have factored into this year's balance sheet for China. It's our view, not the general view of USDA yet. Again, going back, the gold of the market is soybeans, and the rice price is, as you know, gone nowhere fast. If you look at the relationship of rice to soybeans, we've got a dramatic bear problem here, and that is a bull problem here, and that is that we are approaching 25-year lows on the spread between soybeans and rice, down to about 41% of the price of soybeans. And when you get down to this level in the marketplace, what happens is that the rice gets cut. And these lows in here have cut rice dramatically over time. And it makes sense. They can grow beans, they can hedge it forward and produce a lot of beans, and that also allows them to rotate out of rice to get some control over red rice, and a lot of other things are involved here. But that is not bullish on rice acreage. We think it could be down 20 to 30%, take your pick. USDA is already down 15 to 18%, which I agree with. And if it's down 20 to 30%, then we've got to cut our exports hard next year. And that's why we're forecasting a price in the coming season as high as $14 average.